Hi everyone, very good evening and welcome to the Financial Modeling Masterclass by IM Skills. Hope you can see my screen and hear me loud and clear. If you can confirm in the chat box, please. Perfect. Hey Harsh, thank you Jaya. Thanks for the confirmation. Perfect. So to begin with, we are going to talk about something that is very, I would say, interesting and very much in demand as a skill. That is financial modeling. Okay, when we talk about financial modeling in specific, there are multiple things that are associated with it. So to begin with, the first one is the company's projections. The major one is company's financial statements. Then the next one is company's future. So anything that relates to the financial statements, that relates to the business logics and decision making is what is related to financial modeling. So before we begin with that, do you even know what exactly is financial modeling, guys? What do you understand by financial modeling? So if someone asks you, how do you define financial modeling, then what is your answer? Everyone in the chat box, please. What do you understand by financial modeling? Ria says prediction. Definitely. Then we have Avinash saying forecasting and valuation. Jaya says predicting our future P&L. Again, prediction of profit and loss. Then we have Anish saying mathematical models which can predict companies' financial products. Okay, so one keyword here is mathematical models. That is, it has something to do with the numbers. So mathematical is a keyword. Then financial products. We'll come back to this, but this is a very good keyword here. Then Hans says structured representation of financial data and relationship between them. Okay, so financial data. Then we have the saying budgeting. Okay, then we can call it in prediction itself, budgeting as well. Then we have Kanav saying analysis of financial statements and forecasting. Okay, so then there comes financial analysis. So you see, okay, Shabad says analysis of financial profit and loss. Again, financial analysis. So more or less, your answers are towards something that is numerical, towards something that holds value in the future. So these are the two common keywords that everyone has. Now, before I tell you what exactly is financial modeling, do you mind telling me who would prepare a financial model? Like, why would a company need a financial model? What is the application of financial modeling? Like, why would a company spend even one penny to get a financial model prepared for themselves? What is the incentive for a company to get a financial model? Which certificate you are talking about, Harsh, for this session? So this is for knowledge. This is not for a certification. No? If you need knowledge, then definitely this is for you. If you need only a certificate, probably this is not the session for you. The certificate will be provided if you do the full course. This is the orientation. Okay. So Hans says the financial compass of the company. That is a good way to say it. Harsh says for planning. So you need the financial model for planning. Okay. Then Avinash says for mergers and acquisitions. That is a very good term to present to investors and raise funds. Okay. So Abhinay says for fundraising or capital raise. That's how it is called in the industry. Then we have Shravya saying to predict company's financial performance. So it's more of a financial planning and analysis work, FP&A. Then Kanav says to predict insights to provide insights to the stakeholders of financial statements. See, for providing insights, you probably need more of accounting and more of analysis, not modeling per se. You can do that even without modeling, but definitely if you have a model, you can, I would say, drill down into the variables and do that way. So yes. Then Prajwal says for valuation, definitely. Then we have Raghavendra, again valuation, perfect. Ankur saying we'll get recording of the session. Yes, you will get the recording of this session. This says decision on a new project. So definitely planning and decision making. To decide IPO price if the company is going public. Okay, Anish, definitely that would again come under valuation. So pricing of shares. To see the financial health of the company. 100% Aditya. Financial health. Now, if you have to give a very structured answer to someone, maybe your client is asking, hey, dude, why do I even need a financial model? I'm running a good business. No, man, you're not. The reason, do you know where your costs is being incurred? Do you know you can trim down your costs and increase your productivity, increase your profitability of the business? Do you even know whether your segment A is more profitable or whether segment C is incurring you losses? Do you know what is the timing of the cash flow that you should expect? Do you know which month you will make more money and which month you will make less money? Do you know if you sell the company today, what is the value that you're going to get? Do you know how much your loan costs you if you take from bank A versus bank B? Do you know how much cash that you are burning every day and when would you turn profitable? Do you know how much funding you need? Do you know when do you need the funding? Do you know at what valuation you need the funding? So many questions. And all of them can be answered through one way, that is financial modeling. So to begin with our session, financial modeling masterclass, this is what we are going to talk about. So I would like to introduce myself now. My name is Varun and I head the finance division here and work as a strategic advisor at iamSkills. I am an entrepreneur myself and run 3 businesses into consulting and provide financial modeling to the real companies. I have worked with a lot of investment banks, a lot of private equity firms and startup firms themselves to help them prepare financial models for different reasons. The first reason is to help them understand their budgets so that they can eventually turn profitable. Then there are startup companies who are still at a vision stage, who have not even executed the idea. So we would help them create the business plan. You must have seen Shark Tank. So those type of companies are the ones that come to me for a resolution. Then there is another application that we do is for the deal purposes. That is what we call transaction services, wherein we help companies prepare models like M&A models, accretion dilution, capital raise models, LBO models to understand if they raise money, if they buy a company, if they sell a stake, what is the profit, what is the valuation that they should aim for. Then there come companies that are operating models that are prepared for understanding the metrics, that how are they performing versus the previous year, how are they performing versus the market benchmarks, all type of operation related stuff. So different reasons, one solution. That's exactly the financial modeling concept. Okay, now if someone has to ask you a definition, then financial model is basically a tool or a calculator that can be used for multiple purposes. So the keywords that you have to understand and inculcate in your vocabulary is that financial model is basically a tool or a calculator which can accommodate different types of inputs and give you a desired output. The output could be different. It could be a valuation figure that, hey, this company is worth $7 million. This share is worth $20, something like that. Or it could give you that, hey, if you invest the money today at these, I would say deal terms or transaction terms, you will be able to make 35% IRR in 7 years. So IRR, the return metric is the output here. If you plan to, if you plan to expand into geography X and launch a new product Y, your profitability can increase by 37%. Here, the output is understanding the profits. So there can be different reasons of doing a financial model, and every financial model then becomes a different product in itself. And that is the beauty of financial modeling. That it can help solve real financial problems. It can help them create a financial infrastructure and help businesses take insightful decisions for them. And it should be dynamic, first of all. It should not be something that can accommodate only one type of assumption or only one type of number. It should be dynamic. If you change the pricing, that hey, I was selling the product at rupees 50 per unit. Now, if I sell it at 60 per unit, it should be able to accommodate different types of scenarios. Hence, it should be dynamic. It should be automated. It should not be something that you have to change at 100 places. It should be that if there is one change, it should be done at one place. And your financial model should be automated, linked in such a way that from that assumption sheet till final dashboard, everything gets auto updated in a fraction of second. Then it should be well formatted. No one likes to look at a dirty model. If your model is not telling a story, then it is meaningless. Your model should be something that can give value to the user that, hey, I learned this about the company. This is what is the messaging. I often say that financial model is converting your business plan into numbers, converting them into mathematical formulas and equations. So that's about financial modeling's concept. I'll take a pause here. If you have any questions, happy to take them up, else we'll move to the next thing. So I think some Pankaj has a thing. It is a projection to check in Excel by key in this. Definitely, Pankaj, all the terms that you have written are very important and are, I would say, key metrics. That is what we call in financial languages or jargon is KPIs, key performance indicators, IRR, and all that stuff. So this is what is going to be the, I would say, metrics to evaluate how the company is performing and all that stuff. Abhishek, can you give a recap in 1 minute? I joined late. Abhishek, so we were talking about what exactly is the financial modeling and what is the application. So financial modeling, like you have a calculator at your home or a application in your mobile. What it does, you basically give it a command, you give some value, it gives you an output. That output is just like preparing a financial model, setting up an algorithm that it can accommodate different types of variables, inflation, it could be economic variables like inflation, repo rate, interest rate, like any subsidies, taxes, and all that. Then business specific assumptions like what is going to be the market size for that particular product, what is the capacity of the business to produce a product, what is the customer demand, what is going to be the pricing, and all of that leading to your profitability, valuation, returns, and all that stuff. So that's in a nutshell what we have discussed, Abhishek. Divyansh, that's a very interesting question. I'll tell you, first of all, you need to understand financial modeling is not a financial product. It is a product that would be used by everyone. Now, what are you doing as a part of financial modeling? You are going to convert the business plan into mathematics. So mathematics is something that you should know. If you are from BTech, your maths would be like, you would be good at maths. Okay. Secondly, every business has a different model. A bank operates differently, a tech company operates differently, a school operates differently, every business operates differently. And some of these companies would be very heavily into technology. And if they're heavily in technology, having a BTech background would give you an edge to understand those businesses. Whenever you look at the financial modeling companies now, they will never hire all finance people. They will hire people from technology. They will hire people from the literature. They'll hire people from different schools and different principles and different degrees so that they can create a deal team or a team who is having knowledge to understand different types of sectors and industries, because financial modeling is going to solve that. And might be good at one industry, you might be good at different one. So together we will be able to create a knowledge that would be great. So for example, let's say you have to prepare a financial model on a company that produces electric vehicles. Okay. Now, if you have done that type of study and you know what is a car, what does it take for a car to do it, whatever you know about the tech part, battery part, and all that stuff, then you will be able to better predict, better understand the technical terms of the model, better understand the jargons, better understand the mechanics of that. And hence you will have an edge. So short answer, companies want people from different backgrounds, and having a BTech might give you an edge in some field or some employment where they want BTech people. Okay, that's the very right answer for you, Divyansh. Any other question, Divyansh? Till then we'll move to Arvind. Do we need any prior knowledge for this? Arvind, answer is yes. You would need, and I would not say prior knowledge, but there are certain things that you would need. First, it would be good if you are good with communication, because this is going to be a royal field, a royal career choice. And you have to be good with English because you might be interacting with intellectual people and you would be interacting with the people across borders. So having knowledge through a good command over English and good command over your communication skills would be the must. Then you should not be afraid about numbers, because in financial modeling, numbers are very important. So these two, if you have, and then the interest to learn something, these three are fine if you have them. Okay, Arvind. Then we have Arvind. Then we have Abhinaya. What is the difference between financial modeling and financial analysis? Abhinaya, that is a very interesting question. They have some gray area. There are certain things which are common in financial modeling and financial analysis. So as a part of the financial modeling course, you will go through both of them. You cannot prepare a financial model without understanding the financial statements, without understanding the business. How would you project how the future would look like if you don't know what the company did in the past? And the exercise of understanding the company's past is basically financial analysis. You need to understand what the company had been doing in the past, and that exercise can be achieved through financial analysis. It would include your ratio analysis. You need to have a good command over accounting statements, financial statements, and all that stuff. Financial modeling is basically creating a model out of that, using that knowledge to predict the future and do all the necessary going forward tasks. Okay, Abhinaya? Perfect. Now, Arvind has a question. What is the difference between financial risk management and financial modeling? See, the art of making a financial model is financial modeling, and that financial model is basically a product. Financial risk management is basically an exercise that is basically an objective oriented exercise. So if you know financial modeling, then you will be able to manage the financial risk. Now, financial risks are of different categories. So let's say you are working at a bank and you want to give loans to those companies which have a good credibility, and they prepare a business plan and submit to you, and you have to evaluate that. If you yourself don't know financial modeling, how would you like to evaluate those business models and see if those numbers make sense or not? Having a good command over financial analysis would be important. Then, as a corporate guy, maybe if you are working as a finance manager, you need to understand that what is the business going to do. To understand if this is a risky investment or not, you need to predict the future. You need to do the analysis. You need to note down on sheet that, hey, this is what is going to be the revenue, this would come with this associated cost, this would be the turnaround time, this is the burn, this is the investment we need. All of that would get into numbers and mathematics, and that's what's financial modeling. So financial modeling would be used to manage the financial risk of the company. Okay, Arvind? Harsh has a very interesting question. Can this enhance a profile of a CFA student against engineer CFA student? See, first of all, CFA is a very relevant degree, and financial modeling is one of the topics that is covered in CFA these days. So lately, CFA Institute has added this topic to their curriculum as well. But CFA is more of a theoretical exam, which will give you knowledge. But if you have to actually put your hands and make a model out of it, you have to learn the key things and hacks of financial modeling. So it is definitely going to add value, because whatever you will study in CFA, you have to apply that. That application would be done through financial modeling. Okay, Harsh. So I think Devyansh, Ankur, and Arvind, all three of them have the same question that, hey, if I am from non-finance background or non-commerce background, how am I going to cope up with this? See, is there something that you should know? Probably I told you what you should know. You should have a good command over communication, language. Then you should not be in a fear or phobia of numbers. and you should have an interest to learn financial modeling. Now, that being said, if you are not from a commerce background, the day one might look different for you and for someone who has a background in commerce, because they would understand what is going to happen. But how are we going to solve that? That is the point. If your start lines are different, doesn't mean that your finish lines would be different. If your start lines are different, that means you need more material to brush up and learn those topics. So we would provide you two types of material. One would be a quick glossary that would define everything in a one line. Now, what is capital? Capital is this. What is profit? Profit means this. What is account? Account means this. And then there would be a book which would give you detailed concepts. So one would be a glossary, one would be a book. So that if you are able to go through, we will teach you like a kid that you know nothing. And if you know everything, that would be, you would get to raise your level now. You would be able to revise, because sometimes, even if you are from a commerce background, you will know the fancy things, but your basics would be not on the point. Like, what is the accounting principle? What is the difference between accrual and cash? And some interviews would not even test your technical skills. They would know that you would go and study about DCF before sitting in the interview. They will not ask you. They will ask you the basic. What is debit and credit? What are the three golden rules of accountancy? So all of this, from exactly what is accountancy to financial modeling core level to macros and Power BI, everything would be covered in the live lectures. Okay, that answers Devyansh yours, Ankur yours, and Arvind your question. Then we have Batsirai. Will this help in structuring transaction? See, the objective of financial modeling is that only now. Why are you building a model? One of the application of financial modeling is to help give transactions a actual success. So we will talk about LBO, we will talk about the capital raise private equity models, we will also talk about the M&A models. We will also talk about redeeming cash flow, but that's not a deal model, that's a FP&A model. So we will actually build models that are going to be deal oriented or transaction oriented. So definitely we'll do that. Then we have Ankur, how much Excel knowledge will be required beforehand? To be honest, the classes that are already being, I would say, conducted, they assume that you know nothing. So they will teach you from the basic Excel functions of sum, if, and all that, and then take you to the macros and VBS level. So even if you have zero knowledge, that is okay, but you should be able to cope up. You should be able to ask questions. You should actually know how to use a keyboard. I'm not saying you should know the shortcut. Shortcut also we will give you, but that you will eventually memorize and eventually be able to use for increasing your productivity. Okay, Ankur? Yes, but right answer is yes. Devansh, okay. Are we going to see any example in this demo class? If see, I would like to for let's say base to energy project. CapEx this, OpEx this, project like this, cost order this. Pankaj, that's a very good question. I am very happy that you came with an agenda. So maybe I'll show you. I don't mind extending this class for 3 hours if you have content. So if you want to say that if you are doing it for a waste to energy project, that means you are basically going for a renewable project. And these type of models are generally the project finance models. And wherein these are the models where would the revenue line would be the energy or the electricity that you would sell. So it can be through a residential or a commercial project. You need to identify that. For your COGS, the majority portion would be the waste products that you will buy. It could be a bio waste, it could be a biomass, it could be something like that. It could be a food waste. Some countries give you money to pick that waste. So that could be an other income in your business. Now, this type of business is very capital intensive and you cannot increase the revenue every year because these are regulated businesses. You are going to sell a product that is going to be a need for the economy, energy. So you cannot change the price. And this is not something that everyone will do. So it is a very tight barriers to entry. So CapEx is going to be one of the orientation here. So whatever investment you will make, that you can capture as a part of the CapEx. But the revenue projection, if you talk about, that would be based on your plant capacity. So for example, your objective here are two. If you are telling me what is the cost of debt, if you are telling me that CapEx will come from debt and equity, I understand that you are going to ask about the IRR on this. That, hey, if I make an investment of 150 million, this is the revenue that would be generated. This is the OpEx. So this much money would go into my expenses. Then I would be left with this much profit. Out of this much profit, I will have to service the debt. If it is 8% cost of debt and 70% of the capex is coming through debt, that means 150 million, 70% is debt, loan. Out of that loan, I'm going to pay 8% as a I would say interest cost. If it is on a diminishing balance, it would go, principal would go. And this way you can calculate what is the return or the cash flow that is available for equity and get your IRR. So there can be two IRRs, one would be deal level and project level. I don't want to get into further detail in this foundation class because that would be overwhelming for others. But what you asked as an answer, I think I have delivered that. If you have anything specific that you want to know, Pankaj, happy to tell you. Pankaj, you want to see it in Excel. I think you want to test my Excel skills. Okay, I'll do that for you at the last like 10-15 minutes of the class. I'll show you. Okay. You will stay for last and I'll show you how this can be done. It should not be long. Then Harsh has a question. I wanted to ask what is campus immersion in job guarantee program? Okay, so job guarantee, first of all, we offer two types of program, job guarantee and job assistance. So campus immersion is something that would be covered as a part of job guarantee. So as a part of campus immersion, you would be invited to our North Delhi campus, wherein you would be invited to the, I would say, North Delhi campus, and you would be sitting with your colleagues, your faculties would be coming to you, and there would be networking sessions that would be organized. There would be also some companies that we might invite. There could be some guest lectures that we would do. There could be something or the other we do every now and then, every like probably every quarter or something like that. So that way, you will not only gain the knowledge, but you will actually be able to do the networking. That is a very important asset because that is going to help you learn something with people that are like-minded and that you could not do sitting at your home as a part of online sessions. So that additional thing would come. Arvind, self-paced program is basically self-tutorial. So that would be recorded sessions only. You will not be interacting with the faculty as a part of that. So that is for people who want to quickly cover it or who have a knowledge but just want to brush up. But if you need to learn everything from the faculty in real, then that is not meant for you. Any other question? Else we can move ahead. Also, as a part of, since you talked about the job guarantee, also as a part of job guarantee, I would say we cover the freelancing part. So the goal of the course is not to only get you a job. The goal of the course is to get you a skill that can help you make money. And money can be made through jobs 100%, but also outside jobs. So this is a financial modeling, I would say, is a language that is spoken by everyone or spoken by everyone across borders. So people living in America are also building financial models. People living in London are also making financial models, and they are not making anything different. The concepts don't change. So this way you can learn the skill of freelancing, social branding, and your, I would say, how to get the clients also. That would also be covered as a part of the job guarantee program. If you are not looking for placement, if you are not looking for networking, if you are not looking for campus immersion, if you are not looking for freelancing, if you are not looking for social branding and only the skill, then you should go for job assistance, Arvind. You should not buy the guarantee one. That is the nice point, Pankaj. And like, I'm not sure if you talked to any of our ex-students or not, if you watched any of our past module or not. You should that. The real models are being built. I can even show you what our students built. Like, I'm happy to tell you, even if you want, we can have a demo class for you in the live also. Should be fine. Daisy, what happens in the group mentorship? So group mentorship, I would tell you. So first of all, the classes happen in the group. Okay, there would be batches because that's where the actual learning happens. Now, in terms of the group mentorship, there would be a lot of things that you would like to know outside the books. Hey, what is happening with the career? Hey, what is the right choice for me? Hey, whether I should do the interview preparation like this or I should follow the other way. So all of these questions would not be academic questions. They would be more of career orientation questions. So that would be covered as a part of the group mentorship. Okay, Daisy? Can you help me? What kind of real-time project do we get in organization as financial manager? You could throw some light. Aditya, that's a good question. That depends on what type of organization you are a part of. If you are working in a corporate, you would be probably doing budgeting. You would be probably preparing 13-week cash flow models. You would be doing the budget versus actual variance analysis. If you are a part of investment bank, you would be preparing financial models with valuations. You would be preparing M&A models. If you are working in a private equity firm, you would be preparing LBO models. You would be preparing the investment models. So it would depend upon what type of organization you are part of, because different companies would prepare different types of models for different objectives. Next question, please. Then this program helped me get into big firms. Harsh, no program can help you get into big firms until and unless it is only going to be your skill that can help you get into the big programs. So if you think that you would be able to prepare financial models after this and follow the curriculum in very detailed manner, then you can get into the, I would say, big firms or small firms. The firm size doesn't matter, to be honest. Okay, it's more about the, I would say, the role. If you are able to actually create a skill set that can help the companies generate revenue, they would hire you. That is how it happens. That makes sense? Ankur, answer is yes. What's the next thing? Hello, sir. I want to ask you that do the compliance associated role in a way management in the base for financial management? See, compliance associate. Now that's a very different domain. That is more about the risk. It's more about the policies. It's more about that. So if you are going for an investment banking role in compliance, that role is more aligned towards the legal stuff. Having a knowledge is anyway good because then you would be able to understand all that stuff. And if there is any business that would be there relevant, you can do that. But it's more of a legal part. What role offered by company for FM role? There are different types of role. Some of them are going to be in corporates for the FP&A. Some of them are going to be into the KPOs for working with the deal teams. Some of them are going to be for the valuation advisory firm. Some are going to be for the equity research roles. Some are going to be for the corporate finance. So there are going to be different roles. kind of industry tools are you using? Do you start building a model? Are you using automated marketing? So we teach modeling from scratch. Answer is yes. Tools, Excel, we would cover that. We would cover Power BI. We would give you knowledge about the Chat GPT and AI, and would also give you knowledge about the Python. So these are going to be the tools that we use. See, first of all, you need to define what is exactly equity research analysis. Okay. So equity research analysis includes preparation of financial models, preparing the valuation and understanding if the company is fairly valued or not. So that portion would be covered. Okay. What else? Yeah, the next question, does compliance associate role add value to my resume for latter financial job or not? Compliance associate role would add value. See, it is not going to add direct value, to be honest. You're not doing anything that a finance person would need in specific. But having certain, like, if you're doing it in the financial company and you look after the financial products, then that knowledge can be helpful, but it is not a direct thing. Hans says integrating AI in the modeling. Yes, that would be covered. John, nothing changes for the people who are located overseas. Everything remains the same. You get the same knowledge, you get the same assignments, everything remains the same. You will get the recording for the sessions if you miss any of them, and everything would be covered as that. In terms of your placements and internship, also, you will get preferably if you are based out of that country and you have the work visa and you are legally allowed to do that, it would be granted to you in your preferred geography also. Are there relevant job in tier two? Abhinay, yes, the answer is yes. There would be opportunities in the tier two also. Tier two are no more tier two these days. A lot of companies and corporates are opening offices in tier two because of the real advantages of tax subsidies and all that. And that's going to be helpful. So you would get that. The organizations, big fours are generally not there. Big brands generally don't open for like, but there would be local companies, domestic companies to begin with. I've never practiced accounting and have that is a good thing, I would say, Ishita. Everything would be covered from scratch and you would be able to make out of it. So if you are having the expertise in terms of a communication and a love for numbers, this would help you. Then we have the next question from Shabad. How will this go into the environment? By helping you make models. So there would be different things that would be covered. First of all, there would be the books that you will get for your academic knowledge. Then there would be assignments that would be given after every module to test your understanding. Then there will be models that you will have to build by yourself from scratch. You will have to build a model for a public company. You will have to build a model for a private company, a budget model, a valuation model, and a deal model. So these would be the tasks that you would do. Then there would be capstone projects would outside companies that would be compulsory for you to do. So then again, that would be practically would be actually making models and doing the financial analysis. Then after that, there would be internship support that would be provided. And when I say support, I mean the guaranteed internship that would be provided. Every one of you would get that. So again, that is a practical thing. Avinash, a lot. A lot than you can think of. The reason is accounting and accountants are doing 50% of the job already. They are in touch with financial statements. They help in getting that in shape for the historicals, but they are not doing anything for the future. So you would be able to extend the knowledge in that sense. When is the first group starting so that I can plan accordingly? But say the first batch starts this Saturday itself, so day after tomorrow, and the class timings would be 10 a.m. to 12 noon IST. And you know what? The class timings are going to be in the morning, and there would be separate doubt sessions. There would be contact details that would be provided to you for your faculties. There would be WhatsApp group for discussion as well. Okay. John, I can friend would be. Okay, if you have any doubts, there are 4 different ways of asking doubt. One way would be that you ask the doubt within the class itself. Hey, I have a question, and the faculty answers it. The other way could be that you probably reach out to the faculty over an email over the next class, or there would be dedicated doubt sessions that would be conducted for that particular, I would say, module and assignment that you can attend, or there would be WhatsApp group that you can do. What timeline that you should complete the course? Ideally, the person should be able to complete the course within 4 to 5 months. The fee structure, there are 2 types of courses, so there are 2 types of fees. So one of them is basically a job assistance, that is 49,900 plus 18% GST INR. And then there's a job guarantee, that is 1,49,900, that is for if you are outside India. So that would be INR 149, or I should say 150K plus GST. You can check for your particular country's exchange rate and all that from our one of the counselors. Maybe Perf can help you with that, and that should be helpful. That answers your question, John. Aditya, I would do that at the end of the session. I already have to do for one of the guys who asked for the energy project, so I'll do that. What else? Any other question anyone has? Sure, the LinkedIn profile. But say the sessions would be delivered 10 a.m. to 12 noon IST, that is India morning. And doubt sessions are generally conducted in the evening time of India. Or do you mind sharing the LinkedIn profile, please? Devansh, it depends upon your case. If you want hand holding a lot, you want there should be a guaranteed placement for you. You want to build a network, you want to build your social branding, you want to get additional mentorship, then you should go for the job guarantee. Okay. What else? Any other question? Else I will start my sharing my screen in after 10 minutes and show you the model. Anyone else has any other question? I'll wait for 5 more minutes and then I'll share my screen for the live financial model. Yes, Aditya, we use DAX functions. That's good, Ria. Python is going to help you manage heavy data sets, I would say. Okay. So in terms of your data, wherein you have to clean that or you have to create something that is data intensive. For example, you have to do an analysis of the data for the last 5 years of sales. There would be millions and millions of transactions. So that time Python would help you with that. Any other question, guys? Okay, I'll share the screen then. So by the time you were asking your questions, I got this model ready for you. So who was the one who asked this question? What's the name of that person? Pankaj. Pankaj, you there? Perfect. So I hope this is something that you were looking for. So obviously this can be made cleaner, but this is what I could do in 10 minutes. So we have these inputs. So you gave me the capacity, 25 megawatt. Tariff was this. I'm assuming this is the rate, so it would be kilowatt hour. Then I have assumed 300 days in a year because there would be holidays, there would be something or the other outage days. There would be days when you would be getting that overhauled or with some repair work. And there is one more metric that is used is availability factor. That what is the loss to transmission? 2%. So only 98% of the energy actually gets consumed because once the energy is transmitting, it gets lost in the environment. So these would be the variables that would be used for electricity revenue. So there would be two types of revenue. And as I mentioned in terms of tipping fee, that is a tip that you would receive because you are helping the government clean waste. So this is what you are going to get. Again, the same $35 per ton. There is 1200 ton of waste and then 300 days. So this is what you would get as an additional other income. This would total up to your total revenue since you mentioned that it has to be flat. So this is how it's for 27 years. Now, OPEX, you mentioned that it would be 10 million every year. So that is how it, then you would get the profit for every year. In the year zero, that you would invest 150 million USD. So at the project level, in terms of the all the people as a capital, you would be getting this much cash flow, and this is how it would be done. But if you bifurcate, so this is the IRR that you would get. Since I have not added the dates and they are equidistant, we have assumed the IRR. If we have the dates, we can use XIRR also. Now you mentioned that there would be 70% of debt and 30% equity. So the debt portion would be 105 million and 45 million would be equity. So first of all, we would understand what is going to be the interest portion. I've assumed that we'll be paying 8% interest. So it's a interest only loan and the repayment would be done at the end of the period on the last day. So you will pay for that particular year also. So the cash flow that is after the debt service, this is what you would get. And for equity people, you would have a 208%. And then you can calculate the further things also. If you want to calculate NPV, you will need to have the percentage. What is the expected return you are having? Payback, again, you can calculate when is the money that is going to be recovered. Since RR is positive, the money would be recovered within the period. That is the logical analysis. So this is type of models that you would be able to build. Makes sense, Pankaj? And there was one more guy I was asking for live. This is how much time it would take if you actually know how to get it done without a template. Payback. You want me to calculate the payback period also for you? You are testing my knowledge or you want to learn that? Waiting for your answer, Pankaj. There are multiple ways to be honest. I'm waiting for your answer. You tell me. Okay, let me tell you. Or to leave you with the last question. So you would calculate the cumulative one. When you reach that period, that is the payback. So you would do a summation for this. We'll freeze this first one. This is the best shortcut that you can use for a payback period. So you know that you are gonna realize 150 million pretty soon. So since the assumptions that you took were very attractive, so your payback period would be less than 2 years but greater than 1 year. If you want, you can do the pro rata also. So by the time this number is greater than this, it is not a payback. And once this number crosses this number, that would be the year wherein you will have the payback period. I'm missing indexation, sales and OPEX, amortization of the loan or sinking fund plant as to renewed. That would be additional variables. You can add any, okay? Perfect. We have 2 minutes. Any other question anyone has? Else, if you want to make these type of models pretty quick, you can join the course and learn from that. Perfect. Have a great evening, guys, and wish you all the best.